for April, real estate and mortgage update. You know, I miss March. And I think there's a lot of people in the market that might. So what's going on? Simple. Rate volatility is back at a new level of pain that we all got to experience this month that definitely made me consider hiding under my desk, not once, but twice. So here's the underlying theme. Rates. What the heck is going on with rates? It's simple. So last year we were sold a bill of goods that we were going to get a couple rate decreases this year. And everyone was thrilled because, in terms of housing affordability, that was going to be huge, right? Let's help people. This is getting out of control. Housing affordability is a problem. We all know it. I'm not going to pretend it's not. So everyone was really hopeful rates were going to drop. They didn't. Then it was like, oh, yeah, no, I guess it won't be April, May. Oh, darn. Maybe June. So March, the rates were looking pretty darn good. Everyone was hopeful there was going to be a drop in June. Then April happened. That's right, ladies and gentlemen. What is the problem? It's inflation. It's inflation. It's not going anywhere. So with inflation still being sticky, with the CPI out of control, rates bounced up. And the reason they jumped up is because the whole market went, oh my God, the war on inflation is not over. They might have to increase rates. Yeah. So let me be super clear here. Rates have not been increased or decreased, right? And we're not, this doesn't directly affect the mortgage market, but it affects the market as a whole. But yeah, the Fed hasn't increased or decreased. They haven't done anything. Nothing. Nada. Nothing. But the market likes to pretend like they did. So, there was one day where I saw rates in many cases go up 0.5% in 24 hours. And as I filmed this, it's leveled off a little bit, then it went back up, but we're not back to the lows that we were in March. And this is all based on reports and what the market thinks the Fed will do next. Now, part of this problem, because I was really thinking about this over, the last few weeks, I've been doing this for over 15 years, okay? And if I think back to my career, there wasn't rate volatility like this until really 2019. If I think about when did it start just getting crazy, it really started with 2019, 2021, okay, COVID, 22, 23, I mean, if you guys watch the channel, I've been like, it's a seesaw, it's a pendulum, it's just nauseating, it's a roller coaster of puke, it's all of it, right? I think one of the key factors that's contributing to this is the fact that anyone involved with the Fed, whenever they speak anywhere, whether it's a college campus, the bar down the street, they're on a walk with their dog Toodles, right? If they say anything, it's almost like they're treated like rock stars, celebrities, Elon Musk, and it gets reported everywhere. And then you've got all the reporters on it, and then everyone wants to speculate, and then the markets are all going crazy. And it's because we're treating the speakers of the Fed like influencers or celebrities. And the 24-hour news cycles feeding into this, add on social media, and you're creating this hyper bubble of anxiety and knee-jerk reactions, okay? That is my personal feeling of what's going on, because we did not see this level of instability in the past. So what do you put together? The news cycle, the interest in, the Fed and what they're doing, social media. I can't say it enough. And I know people are going, well, social media. Think about how many people are on social media talking about what they think the market's going to do. I mean, how many times have we seen this thumbnail? Right? The market's going to collapse. The market's going to save. Rates up. It's just this vicious animal that can't be fed enough. Okay. So what do you do? Well, look, what we're doing is what we've always done. The day someone's in contract, we're going over rates. We're talking about what we've seen in the market over the last few weeks, what the projections are. Honestly, the projections at this point are a little bit right? Last year we were all going, well, they said, it's kind of like if your parents say they're going to give you a treat, they're like, oh, well, you know what, Jen, if you do all your homework, I'm going to take you out for ice cream. I did all my homework, Dad. Where's my ice cream? It's like that. it just isn't happening, right? And so it's like, you wonder if there's also a game of manipulation and what is being said versus the reports versus sentiment. It's just too much. It's too much. So we go over where we are with rates right now. Give the client the ability to lock. That's what you want to be doing. Like right now, if, because I'll talk to buyers who are talking to other lenders and they're going, well, the other lender said I should wait to lock. And I'm like, I don't know, and that's the thing. No one does. Dad has been lying about ice cream for like 3 years. No one knows. The people who are predicting where the market is going, they've been wrong constantly. And also, who do you pick? You've got 50% saying that now rates are going to go up, and you've got 50% saying that rates are going to go down. It's a mess, right? So my general advice is going to be, look, if the rate is feasible to you right now, let's lock. And if they go down, let's renegotiate, okay? That is how you handle a market with this level of volatility. If you decide you want to wait to lock, that's on you. You just have to know you're gambling. So when you're working with a lender, you want to be having these conversations, because there are some larger lenders that are telling people, oh, well, let's just wait till a week before because rates are going to go down. I mean, I got to tell you, I feel really bad for all of their buyers last week who were looking at those sweet rates in March and got slapped by the jump of the inflation and CPI reports. That's the thing. You don't know what's going to happen next. And you've got the social media, news cycle, all the reports, the sentiment, Iran, right? That was a new thing. You can't gauge it. So figure out where you're comfortable. Make sure you're working with a lender who can lock and has the ability to renegotiate. Now, housing market, what am I seeing? A lot of new inventory? Not really, no. I mean, it's kind of the same old, same old. I'm seeing more buyers, of course. It's spring market. It feels more like a spring market than last year, definitely. Last year was a little like sad. It was sad in April. It wasn't as busy as I would have expected. Whereas, this April is going to be huge. And the interest that we're seeing for May, June, and July, because everyone's just realized, okay, the days of 3 and 4 are gone. The days of 5 are gone. House prices just keep on going up, because if you look at the reports overall, that is the trajectory. Certain markets are already competitive. They have no signs of slowing down. New Jersey, I'm looking at you still. But there is still opportunity. That's what you need to know. Don't be dismayed. There's still opportunity around the country. I was talking to a real estate agent just the other day. She's in South Carolina and she works in these specific towns. And I'm like, oh my gosh, there's great houses. They're like $150,000, $200,000, cute little town. There's some manufacturers coming in. There is still opportunity in America for housing. It's important that you recognize that. And it's important that you realize, yes, these new headlines are scary. And yes, the market volatility, it's no fun for anyone, right? Although I do wonder if there's like 6 billionaires who are just making hand over fist with this volatility, because it's so bad. There's some fat cat somewhere that's like, ha ha ha, rates went up 0.5%, baby. Let's push them down. Let's push them up, and the money's flying around like it's a dance. If you're that billionaire watching this, like, tell me, did I get the moves right with the money cannon? But look, don't give up your home search, okay? This is all static. The key is this. Do you need a house? Do you want a house? Can you afford the payment that we're telling you is likely? Okay, if you can, let's go. All of this is noise. So, as always, thank you for watching. We will see what happens in May. May is Military Appreciation Month, and we're going to be doing a lot on this channel. Guaranteed Rate's going to be matching donations for a bunch of charities, so I hope you guys will tune in when I'm talking about those. Even a donation of $5 would be amazing, because then we get 5 from them, and that's $10 to a nonprofit. So stay tuned, keep your eye on that. All help appreciated, and remember, if you can afford the payment, that's the key. Everything else is noise. Thanks for watching.